Now that it's adjusted to the weekly, we can see it a little bit better. So I'm assessing that we're going to have another high. This high that I pointed out here could be, it could be that it will never play out. This is my assessment of the highest high we can potentially go. You can see the value right there on the right side, around 5,260-ish area. So if you're asking yourself, what did I just watch? You watched this particular video, you watched this Imminent Crash titled video, a video I made on the 5th of February, so basically about 2.5 months ago. In this video, you can see I'm calling out this particular high, as you just witnessed in the video itself. And let's get to the chart. So in the chart, you can see I hit somewhat, wink, wink, very, very close. Humble brag. One of those I told you so moments, but more so it's about what we actively have seen since. We have seen the market correct downwards quite significantly. We can say that in the last daily session, we've seen almost 8% down properly. In fact, we can say we have then a bit of a correction, but what we have seen that is a bit of a major thing, some would say, is a closure of this gap. Okay, we have closed this gap and no longer have this issue in the way. The problem is we have many other gaps, as you can tell right here, and I'm just showing you guys the short-term ones. As you can see, the lowest one resides at around, where was it? I know we have a gap there. It's 4,100. Let's call it a 4,123. As you can tell, on here on the side it shows 4126 for 4123, but more so we have gaps that are slightly above. That means even if there was any doubt that the market will actually retrace back to close, if there was only one gap left, then it actually makes sense why we would have hesitation with regards to the market correcting and closing these gaps. But there are certain more or less rules of thumb that say that it's far more likely than not that at least 2 out of these 3 will be closed. That means it doesn't matter if we make it our way to here, the price action will most likely, more probably, will be magnetized, attracted to close at least this, if this was the gap to remain, which we, by the way, have another one that is sort of hidden. And if I recall correctly, we have another one somewhere in between, again, more of a tiny little gap, but it makes more sense for this for these tiny little gaps not to show again, because it doesn't matter if the market will close everything and anything between this gap and this gap, so the tiny little ones that are hidden in between, of course, will be closed as well. And the justification for this, as you know, we have geopolitical tension. If it's in the Middle East, Russia and Ukraine, those who have been following, I know most people even forgot that's a war going on. Actually, it has been exacerbating on multiple fronts and getting worse in various ways depending on who you ask. It's actually looks like it's getting ready for another rather serious wave from Russia's side, and inevitably a strong defense from Ukraine's side. Just today, I watched the American Congress speak about a bill that will support Ukraine and Israel and Taiwan in the case of need. And beyond the geopolitical tensions, especially the ones that matter the most, are the Middle Eastern ones. Those geopolitical tensions can cause and already are causing tremendous pain with regards to oil. Pardon all my drawings. I'll have to explain all the drawings. So we already have enough geopolitical tension to cause oil to end problems with reserves, problems with other manufacturing countries, other producing countries. So what I want to point out here is rather simple. So if you've been following my previous videos, and I kind of predicted and spoke about how oil will be appreciating in price and value quite significantly and rapidly. As you can tell, you have this channel. Again, it's a give or take, it's just kind of a sketch to show the idea. As you can tell, it's not a crime nor a big deal when the price action does break through this blue line. It does not represent the bottom of the channel. On the bottom side, we don't have just a support, we have basically a channel that the price action penetrates through. In reality, we'll have two ceilings at the current moment. We have this ceiling that is generated from a long-term resistance we had for quite a while. It's been around for quite a long term. You can see it was generated through these processes, through these retests of this level. It's a very strong major level. Another thing, this blue line was actually generated, this blue resistance was generated from here, from around 2022, as you can tell on the bottom right here. You can see the dates, and continued onwards, as you will be able to see in a second. It got another, some would argue, another retest. Some would argue that that wasn't that was actually that 95 level that was stopping it. I would still argue that the price action's intention, or rather the market's intention, was to make it to this resistance level at this 95 level. Ended up being strong enough to hold the price action from continuing upwards. As you can tell, that since then the price has dropped significantly and started correcting here in 2024 as predicted, and we are currently moving in a channel upwards. Some got very nervous when they saw oil break down that rapidly. In fact, I'm rather happy this happened. It's rather not to waste time, and I prefer we do a retest of this channel, of these levels, quicker than not. More so, what I'm seeing is that we're not really testing that upper level. What we are testing is this red level. As you can tell from this chart, from the daily chart, you can see rather easily that the resistance that stopped us was this, although there was some slippage, of course, due to the momentum. Not abnormal phenomena. So in my assessment, what we will see with regards to oil is more likely a retest again of this resistance. Could be that we will see another rejection, another retest, and only then a success. Only then we will penetrate into this wedge formation, which sort of brings me to my videos that I spoke about oil. And some people have asked me, am I assessing the price to break out exactly at this junction? No, what I'm saying is that this area, okay, this range, both in time and in price point, could be representative of the area where the breakout will finally happen. As you can see, so far so good. We're making our way pretty well, and the supports and resistances are being respected. So as I was saying, in my assessment, we will penetrate into this wedge formation, basically, right? And we will give it a retest a couple of times before we eventually penetrate, getting closer to the range that I've marked. And yes, it could be that we'll penetrate slightly. It will break out slightly earlier. It could be that we'll break out here, anywhere. Again, I'm not being precise on the date here. It sort of doesn't matter. In my assessment, the market will continue moving towards that 95.08 area within the expected channel, as you're seeing on the screen right now. Of course, we will be testing various supports and resistances. As you can tell, I marked off every single dollar on our way upwards. Actually, these prices, simply because at these prices, oil has every level matter. Every single dollar that it goes up matters. Okay, so let's kind of keep that in mind. And if we know that oil will be significantly appreciating, our CPI year over year is going to look even worse and worse as our comparable become more difficult. Well, actually, they already are in reality, if you're attentive. To show positives where actually it looks very, very negative and looks bad. I'm not talking about the balance sheet, and I'm not talking the fact of the matter that we started this year with the Fed planning for a gajillion rate cuts, and instead right now we are down to 1 and potentially 0, and even more likely than not, the more honest representatives are telling you that it's quite possible that we will see hikes instead of cuts. Those of you guys who've been following my channel for quite a while can look will know that I've been saying exactly that and expecting that hikes will recommence after a while because they have not finished the job during the previous cycle, and that will cause inflation to be very, very sticky. Oil is not gonna accommodate. Oil, in fact, is exacerbating and making things worse with worsening CPIs. We should expect a deeper correction in the market, as I want to present again this chart. As you can see, for example, on the weekly, it's quite evident how the market is accelerating downwards, okay, how the trend is accelerating. More so, as I've presented, we have various gaps that we need to close, and I'm not even mentioning the ones that we have below. We have other gaps. I will do a dedicated video that will be called Revenge of the Gaps. Yeah, those of you who stayed this long actually will know what's coming. This video will be coming out rather soon. I'll be talking about Revenge of the Gaps and emphasizing how many gaps and how far it seems, in my opinion, that we will be closing these gaps. Of course, remember, I'm not saying something akin to the market will be going this way down. What I'm saying is more something akin to what you're seeing on the screen right now. Potentially this various retests of various levels. Those of you who are in the community, which I'll mention again in a couple of seconds, know exactly. I have my students here, of course, who have done the TA, the technical analysis course, and are a little bit more aware to why we have these various resistances, supports, why the chart looks so messy. But trust me, all of this is tremendously important. My students can actually tell you how important all that stuff is. And yeah, talking about the community, by the way, here it is. It's the only way you can. People ask me about how can they contribute to the channel, to my efforts, to everything I'm doing. The best way to do so will be, of course, through Patreon. In fact, the sad reality is that I'm not tremendously active on Patreon. All the activity is taking place here on Discord. So when you do join, you will first join the public section, and you will see this channel, the rules channel. So make sure you go through the rules real quick and you press this I confirm button. Otherwise, the Discord will not be unlocked. You'll be stuck just in this 1.5 channels, or maybe just one channel if I remember correctly. Then you'll have the public channels, all of these wonderful channels accessible to you. You'll be able to communicate with both me, Tom, and the rest of the gang, if you will, various topics, as you can see. If you need any help, let us know via the support. But if you decide to upgrade, take the next step, become a member, somebody who wants to learn in depth and understand in depth the ideas that both Tom and I teach. Actually, there is a great opportunity right now that by signing up to my course, you get Tom's course for an entire year. It's basically a gift of a value of $1,200. And as you can tell, more so you'll become a part of a community. You'll be able to access his lessons, his lectures. You'll be able to participate in my community that is growing rather rapidly. And of course, you'll become a lifetime member, basically in our members partition. Highly recommended. Again, you don't have to. It's just something I'm telling you about. And with that in mind, ladies and gents, I would tremendously appreciate it, because my community is growing really, really rapidly, and I want to bring this information to more and more people. Drop a like, subscribe, ring the bell, transfer it to everything if you want to be up to speed. And I wish you a wonderful weekend. Thank you very much for watching. Bye-bye.